Markets at this point in time getting a little redder and redder by the minute, as it were, and now two stocks declining for one stock advancing. That's not a very pretty picture at all. 66% of the market is lower than where we left it on Friday, and Friday was a bad day of fall. In spite of it, we are plumbing new depths. The Nifty is 8629, so rapidly getting to that 8,600 mark. Not a pretty picture. So watch that space very closely, and to some extent the macros may also be coloring the stocks. At least some reports attributed Friday's fall to the CPI numbers that came the day before, and the indication that the prices were actually climbing. So on that note, let's invite the expert, Sonal Varma, Executive Director and India Economist at Nomura Fin Advisory. Sonal, how bad was the CPI number? Does it disturb your, inflation trajectory, your fan chart, and your expectations from the RBI?
The CPI numbers actually were marginally worse than expectations. I think the negative reaction is coming on two accounts. One is that expectations on inflation have become quite optimistic, and therefore relative to expectations there was a surprise. And second, in terms of the incremental momentum, in the last 6 months momentum has basically been coming down quite dramatically actually, and this is sort of the first month where incremental momentum has increased. So I think on those two counts it was a bit of a negative surprise. The underlying picture doesn't change. Our view has been that the big disinflation that the Indian economy has seen over the last 12 months is essentially coming to an end, and over the course of the next 6 to 12 months we are expecting inflation to broadly stabilize. Now this process of stabilization itself is going to be quite bumpy. You're going to see some upward surprises, some downward surprises, but broadly our expectation is that the disinflation is largely behind us, and inflation will stabilize in the 5–5.5% range, closer to 5 in the next 6 months, and slightly above 5.5% in the second half of FY16. But stabilization is really the underlying theme.
So cuts from the RBI? So on that basis, and I think a couple of other factors as well, inflation of course stabilizing, but I think a good chunk of the core inflation decline we have seen in the last 2–3 months has been because of lower petrol diesel prices. If you exclude that, then the underlying core CPI readings are actually closer to 5.5% and not at 4%, which is what the headline core number suggests. Second, incrementally the growth numbers are likely to get better in our view, even if one discounts the IP numbers, which are known to be very volatile. The medium and heavy commercial vehicle numbers have been gradually picking up, and on Friday the imports excluding oil and gold, that number is up 10% year over year. So there's an across the board increase in imports also that is visible, from consumption items like electronics to commodities, coal, fertilizer, iron and steel, non-ferrous metal, to certain kinds of capital good imports like machinery, project goods. So there is an underlying pickup in domestic demand which is visible. So growth, inflation obviously are there, but I think at the margin the budget clearly said that they intend to prioritize growth over fiscal consolidation, and so to the extent that the government is doing a marginal fiscal, there is going to be a positive fiscal impulse from the government. At the margin it reduces the need for the RBI to be that much more accommodative. And finally, I think the global picture with the Fed likely to embark on a rate hiking cycle, our base case scenario as a house, Nomura expects from September. The global environment may also change at the margin, so we're expecting RBI to essentially stay on hold going forward, and our expectation is that the RBI has front-loaded their interest rate cuts.
Okay. We talked about a lot of the factors that impact inflation, Sonal, but we didn't speak about vegetable prices. That's been the big concern on the ground, the unseasonal rains and how much prices have shot up. Do you expect veggie prices to continue to rise in the months to come? And if yes, by how much?
So news reports are talking about vegetable prices picking up. Data still doesn't show it. It's possible that we'll start to see it in the numbers shortly. But in any case, vegetable prices tend to rise during the summer months starting April. And therefore incrementally there will be a pickup in vegetable prices. The unseasonal rains are going to add on top of the seasonal momentum. So the incremental momentum actually may turn quite adverse for vegetable prices. But the thing is, vegetable prices are volatile. So, they may post an upside surprise in 1 month. After a couple of months, it could also be downside surprise. But, our focus has to be on the underlying inflation trend. And in the last 12 months, rural wages have collapsed from something like 20+% to around 2% in the month of November. December, actually, rural wages rose at a still muted, but at a slightly higher rate of around 4.5% to 5%. So I think that's really the key in terms of how the rural wage pressures are moving, and we are also seeing rural wages starting to stabilize. Oil prices have been volatile, but March there is some increase in oil prices again, which will show up here, and growth has been weakening, has been weak for few years now, and in the last 6 months growth has also been stabilizing. So the lagged impact of output gradually narrowing will also show up in inflation. So vegetables cause volatility, but I think the factors that drive the underlying trend are also in a process of stabilization. So while there can be some undershooting of inflation in the next 6 months, I think broadly now inflation looks like it's stabilizing.
Okay, that's not looking very good for an RBI that's targeting 4%, although over the next 2.5 years. And you're the first person telling us that RBI is on hold now. No more rate cuts. We didn't quite hear that. We heard a lot of people juggling between probable possibility of an April cut getting pushed to a June cut, but no more cuts is Nomura's point of view. Well, are you seeing any growth improvements? The IIP number in December was improved, was raised. The January number came in better than our polls at least, and the non-oil imports showed a little bit of an uptick. As you say, some of it was electronics and gold, but should we join the dots and say that growth is stabilizing, improving?
Yes, that is our conjecture. In fact, for the last 6 months, we've been making the point that growth has already bottomed out, and we are in the initial stages of a business cycle recovery. So even if we keep aside the new GDP numbers, which show a pretty high number, the growth numbers are still below trend, but I think they are picking up. There are two aspects to, when we talk about growth. One is obviously the long-term potential growth, which will take some time to pick up. But the second aspect is just the cycle part of it, and in the last 2-3 years, not only has potential growth come down, but cyclically also growth has been squeezed for various factors. And our view is what we are seeing right now is some of that cyclical growth actually starting to come back. It's starting to come back because, from the household's perspective, confidence is clearly better, so the discretionary side of demand is starting to pick up. I think relative to manufacturing, it's really the services side of the economy which is doing much better, because manufacturing still the value addition from exports is quite high. So it's more services oriented right now. It's more urban demand rather than rural demand. And if you believe, that things like project build imports and machinery import is a sign of maybe some amount of debottlenecking also happening on the investment side, then maybe debottlenecking is also happening on the investment side. But it is a reasonable conjecture that we are in the initial stages of the business cycle recovery, and the leading indicators that we have constructed in-house indicate that over the next 6 months, the momentum on growth will continue to be positive.
All right. On that positive note, Sonal Varma, pleasure speaking with you. Thank you very much for joining us. So